Polaris came out with okay set of numbers. The top management is now addressing press. First, before we get into specifics, characterize the environment for us. How do you see IT budgets, a budget, panning out for the industry per se, and then specifically for Polaris?
I think as far as the financial services industry is concerned, where Polaris focuses, the budgets are normally flat to low, but nonetheless the investments wherever they need to be with respect to the refreshing of the platforms or that go on towards managing the costs, they are very much there, or the initiatives that are related to the user experience enhancement, those initiatives are on. So it's kind of a mixed bag. People are just about trying to reprioritize their spend and investments. That's what we are witnessing.
Right, as we speak, Mr. Singhal, the stock is down about 6.5%. So clearly the market has not been impressed by the numbers reported and is concerned about the growth going forward. For FY13, what is it that you can offer in terms of the environment for volumes, pricing, and even margins?
I think, being in the kind of business that we are, which is a combination of products and services, there is always a mixed bag. Services, as you know, is routine. The products is what we really are pushing ahead, and we have recorded a good growth last year, about 43% growth, and we are very confident that next year we're going to drive the similar acceleration of the growth, the kind of order book and pipeline that we see. Based on what we see as the current pipeline and order book, we are really looking at making a growth of about anywhere 17 to 20% next financial year. And we definitely want, over the past 4 years, our products are only as old as they are. We've been able to cross the 500 crore mark. We have got several prestigious deals in the bag. We did RBI implementation. We have a JV in Sonali in Bangladesh. We have one of the large institutions in Nordic countries signed up a deal for 15 years. And there are several more that are there. We are very confident that overall we'll be able to post good results for the next year.
You're saying 15 to 20% revenue growth. How much of that would translate into profit growth?
We are not giving the profit guidance at this point in time, but definitely it will be enhancement as we are looking at accelerating the product side of the business.
So what exactly are your clients, communicating? What are they ready to commit? Are they ready to commit more business, lower margins, or are they ready to commit lower business and lower margins?
It's not about the margins. It's more about the kind of services and solutions that we provide to our customers. If you will, Polaris stands as a specialist in banking financial services space for the transformational services, be it through our intellectual property, that is Intellect Product Suite, or through services. We are essentially participating with our customers in the transformational deals, and many a time they land up using a combination of both the IPs that we have and the services SI capabilities. So I think it is about the right pricing rather than low margins and otherwise. I think customers ask us for the solutions that add to their business agenda, whether it be related to enhancing their efficiency or expanding their business. And I think Polaris solutions by way of CBX and Up Technology are precisely geared up in that direction.
Govind, when you indicate, or when you just indicated that you're confident that you will be able to post good set of numbers for FY13, define good for us. What is good for Polaris? 20% growth, 30% growth?
If you will, right from the early days, we have not really been chasing numbers, if you will. We have a strategy to really grow our portfolio and establish the position of leadership in financial technology. If you will, we have probably one of the widest suite of intellectual properties, and we've been strategically trying to industrialize these intellectual properties. It takes anywhere 4 to 5 years. Over the past 4 years, we have been able to industrialize 4 of such products, and this year we are taking up another 3 more. So I think it's all about our ability to gain leadership in each one of the spaces where we operate. Primarily, if you will, it is core banking or universal banking space, the capital markets, wealth management space, or the global transaction banking space. Today we have a leading product in the global transaction banking space, the liquidity, the payments. We are making progress, and this year we'll be making investments in the financial advisory space, private banking space. Core banking is really coming off the largest implementation being at RBI. So I think we are making continuous progress, and what we really are looking at establishing a leadership in all these areas.
Right, Mr. Singhal, even though you can't talk about the kind of profit growth you foresee in FY13, what about margin performance? Because you have, the industry was expecting a margin figure of anywhere between 16–16.5%. You've delivered below that. In FY13, do you target 16% plus EBITDA performance?
Well, we will definitely do better, but as I mentioned, our philosophy and our belief is that we really still need to make a lot of investments. I think this year we want to further strengthen our sales and marketing abilities. We've been investing in the range of about 5 to 6% in R&D to continuously upgrade these products. All of them are going out of a P&L than being capitalized. And I think we want to continue on that trend for a few more years, to ensure that we have a robust portfolio as we see ourselves in next 3–4 years. In past 4 years, we have doubled our revenues, we have improved the margins, and we are looking for another set of 4 years to really make that same impact going forward. We're really not chasing the definitive number of bottom line margin. Our quest is only to go on improving what we're doing.
So do you expect that the Q1 or Q2 trajectory for Polaris will be only on the higher side? It will be uphill, not a downhill?
Yeah, that's what we're working towards. We're certainly looking at improving the trend in the coming quarters.